All right. What's up, everyone? Welcome to a October Friday the 13th edition of This Week in Crypto. We get these October Friday 13th days just once in a while here, and at least here in the US, it's always a bit of a special day depending on your level of superstition. But the show goes on regardless, and it has been one of those kinds of weeks where there have been many big things going on in the real world, and obviously crypto has moved on regardless. And that biggest thing, of course, being the Israel-Palestine conflict in the Middle East, which surprisingly has not really impacted, at least visually, has not impacted crypto markets to a significant degree. But of course, it has been circulating as one of the top topics in crypto since just about 1 week ago when we began to hear about it throughout the world. Our hearts, of course, go out to any of the victims, regardless of where you are in the world, regardless of your stance on it. We are far from the kind of company that would have an opinion on these kinds of conflicts, just as was the case when the Ukraine and Russia conflict happened a little over a year and a half ago, or was first announced a year and a half ago. But regardless, we hope you're all staying safe. And um, crypto, of course, can be a nice distraction, but there are real world issues that are, of course, coming up that will draw you away and make it feel as though prices are less significant than usual. And if this is one of those weeks, that's completely understandable. That being said, our job is still, of course, to analyze what is happening in the 24/7 crypto markets. And that's what we'll be doing here for the next hour or so on our live stream, as always. So, with that said, feel free to drop any questions or comments about the markets or just the real world, you know, things that are happening as we speak here. Our chat is for any topics, of course. Try to be civil, but we're here to talk about anything, right? And what has kind of been a recent trend is the CPI report, which came out in the U.S. just a couple days ago, and it indicated that the economy here in the US, which is always a very important factor when it comes to crypto markets, is showing a bit of extra inflation compared to what was projected. And when that news came out, we did see a slight drawdown in markets, just as we saw in the S&P 500. I'll go ahead. I've got several things to show, but I'll actually start with the contrast between the S&P and crypto because I think it's an important topic right now, as it kind of has been since the beginning of 2022 when the correction from 2021's all-time high really started to take off. But we can see here 4 different lines. We've got bright green showing Bitcoin, dark green is Ethereum, teal here is the S&P 500, and gold is the price of gold. We can see that Bitcoin and the S&P have kind of locked in to one another once again after we saw this big separation here in mid-August where Bitcoin really fell down fast while the S&P stayed relatively unharmed in comparison. But after a little bit of kind of finagling between the two prices, we eventually saw that Bitcoin and S&P 500 started to move up and down together once again. So with that said, we are starting to see a little bit of a heavy correlation again after it appeared as though they were really starting to separate. And we prefer separated correlation when it comes to crypto. Almost every bull run of significance in history since 08 when markets began to be public occurred when there was very few reliances going on between crypto and what the S&P 500 and the overall equities markets were holding. So it's not the worst thing in the world. I mean, this is a correlation that is at least showing that they're moving up together once again, with Bitcoin back at, sorry, one sec. There we go, that's better. So Bitcoin is sitting here at 26.8. The S&P is back at 4369. Notice how gold has really picked up. And this is something that was kind of a phenomenon when the Ukraine and Russia conflict began in February of 2022. Uh, People tend to devalue fiat a bit more when there's war. Several reasons for it, the main one being physical resources tend to take on a higher value when government backed currency is being threatened, or a government in general is being threatened, even if it's countries that are smaller GDPs than the one you live in. That still can have a dramatic impact and a chain reaction on larger countries when smaller countries are having such major conflict that make headlines and can impact any country in the world. So that is the large reason why gold and silver and even platinum and precious metals in particular are seeing a boost. Often, of course, Bitcoin is referred to as digital gold and can have somewhat of a positive impact if we are looking at overall prices as a result of these kinds of conflicts. We do see that crypto is often the beneficiary, and it actually kind of was when it came to the Russia-Ukraine conflict. It had, if I go back 2 years here, we look at what was going on in February. This was the right here was when we had kind of the news break right around February 21st and 22nd. You can see this bottom where Bitcoin was sitting at about 38K, Ethereum was at about 2,600, and they actually both got a boost up until late March when Bitcoin peaked at about 47K, Ethereum at 3455-ish or so. And then, of course, we started to see all of those FOMC decisions where they were raising interest rates, and crypto was really tanking at this time. So yeah, there's a lot of correlation analysis we can do, but there's some other topics that I want to get to for now. One of the ones that we highlighted a few days ago was about Ethereum's top 10 largest non-exchange addresses continuing to climb to new all-time highs in terms of their total holdings. They now hold $61.6 billion worth of Ethereum, 39.22 million overall Ethereum tokens, while the 10 largest exchange addresses are down to 10.9 billion, just recently coming up from an all-time low. So they're moving in two different two different directions. I would say, you know, a lot of people see this as centralization. It is, of course, a case where the wealthy are getting wealthier. Many of these are staking addresses, of course, so keep that in mind. So these could, you know, very easily be withdrawn and moved back into smaller addresses by millions of users at any time. But for now, we're just continuing to see larger and larger split between the two. And also this red line here, 8.5% of Ethereum are on exchanges. If we look at about a year ago, it was well over 10%. So that's come down more and more, just like we've seen with Bitcoin, which is down below 6% now. Another topic, also on Ethereum, we saw a big token age consumed spike. Don't let the fact that this looks small compared to this, you know, 1 year high here fool you into thinking that this is a small spike, because it is very much a big spike that shows that a lot of older tokens were really starting to be moved. And that is usually a good sign, especially when it's happening on prices falling. And Ethereum has actually picked up a bit since this time. If I check, yeah, so it's kind of right at the $1548 level, just a few ticks up from where it was at the screenshot. But typically when we see this token age consumed spike, especially on a downswing, it can be a good sign. This is a classic example right here. This was one of the biggest drops that we've seen all year. happening from late May to mid-June, all of a sudden we see a bunch of dormant tokens moving, and we see this big upswing where we get all the way above $2,000 for Ethereum. So obviously, we're hoping to see that repeat, at least most of us on this call who are bullish on crypto. But obviously, a few things were different. This was a much bigger dormant spike compared to this smaller one. We did see this one here. This was the largest of all time, happening just about 1 month ago. And that had a similar effect where prices did go up shortly after that spike. So in general, the way to use this metric is if prices are moving up and you see token age consumed spikes, that's a little bit concerning, a little hard to see because this bubble's covering it up. But that was what was going on here back in April, right at the top. And then we saw a bunch of dormant coins moving. Logically speaking, we can draw that a lot of whales were likely moving their coins and selling them off at this point because they were reacting to a huge, rocket surge in prices here, thus causing a downswing. Similarly, when prices are going down, you can expect the opposite if there's a big token age consumed spike. So that was what was going on when we saw this mid-sized one here. And you combine that with the fact that social dominance for Ethereum up right now. This is the percentage of discussions related to Ethereum versus the other top 100 assets in crypto. So there has been an increased interest in Ethereum by the crowd since late September here, and that's something that we need to be mindful of. Ethereum is getting a little more in the spotlight right now. And can be more sensitive to major swings as long as it is having these big discussion rates. All right, another topic here. So the open interest for Bitcoin and Ethereum and Binance Coin, these are just the three largest market cap assets, excluding stablecoins. And we saw way back in mid-August, there was this huge growing output in future and option contracts. And generally speaking, when that happens, we eventually see some liquidations. Open interest is, just the overall total amount of future and option contracts that are open. And generally speaking, when there's a higher amount, you're going to see more longs happening than shorts. Not always the case, but when you see this open interest rate rise like this, usually a liquidation will cause prices to fall. And that's kind of what happened recently. Not to the same extent, of course, where we were seeing open interest above 30 billion, that is. And this was, we're getting over about $7 billion in total open interest for Bitcoin. And right around 8 is where we generally see corrections a lot of the time. And we didn't quite get to 8, but it's been enough where it's starting to get close to that danger zone where it often causes Bitcoin corrections to occur. This is absolutely something you should be keeping an eye on now. Even just in the, 2 days since this was posted, we can visit really quick and see if anything has changed. And the answer is no. I mean, Bitcoin is continuing to rise. Total open interest at 6.16 billion right now. Ethereum is very close to hitting above 3 billion once again. And if we look at history, I mean, this is the August one I was referring to. This was an interesting one because Bitcoin moved way down here, and this was after a big upswing, and then it started to stay low. This was a good sign, right? Because open interest on Bitcoin was staying very low as prices were gradually declining throughout June. And then, of course, we have this huge upswing. Everyone gets FOMO, and as soon as we see, 7 billion plus here, that's essentially the top that's forming. And even after the mild correction, look at all the people who thought this was the mild dip they could buy as open interest started to increase again. And then, of course, liquidations ruined those dreams for the time being. So right now we're starting to get a little overheated again. It has to be considered a bit of a concern, and I would keep an eye on that. You can get the link from our Twitter post that was posted just a couple days ago here, and I think it's one of those charts that you can keep tabs on a couple times a week if you're following the markets closely and looking for buy and sell signals. Also, if you're a Chainlink fan, we noted that there are some positives coming from that asset for now. 27 more wallets holding between 100,000 to a million Link tokens have popped up since September 18th, and 4 more between 1 million and 10 million Link have popped up since September 18th. These are generally the two tiers that drive Chainlink's markets most. If you don't know which tiers to look at on Santiment, always try to check out the ones that are kind of in that millionaire tier, $1 million. Sometimes you can go down to $100,000, all the way up to about $10 million. And those are often going to be the ones that can really reflect what the smart money is doing at any given time. So keep an eye on that as well. And with that said, before I move on, let's take a look at the screener, which we normally do at the beginning of the call, but I want to make sure we hit before we get into some of the on-chain and social metrics, if I can speak correctly. So the 7-day trend has obviously been bearish for most of crypto. We can see that just about every asset here had declines, a few exceptions, the big one being unlimited IP. Loom, which is outside of this box, has obviously been on an enormous run, going up over 500% over the past month or so. Bitcoin specifically down 1.9%, Ethereum down 4.5%. Dogecoin minus 3.7. Some of the biggest losses we see Avalanche after its huge week last week. It did decline about 15%. Mantle down 17.7. So yeah, a lot of red here. Much of that was due to just the past couple of days with the CPI report causing kind of a mild correction, nothing huge, but enough where, before that it was about half and half between green and red, and that kind of pushed most assets down. Now, that being said, we are seeing some altcoin surging going on as we speak for the markets, with Bitcoin kind of staying stable and altcoins. I mean, if we go back to 30 days, you'll see that Bitcoin has held up better than most. It's actually still up 2.7%. And I take that back. At least in the last 30 days, most altcoins are doing okay. It's kind of a split bag, but overall, if we looked at like the last year, altcoins have been really dropping while Bitcoin's price dominance has surged in comparison. So mathematically speaking, there is and will come a time where altcoins do a little bit of catch up. It doesn't mean that you should be all in on alts by any means, because Bitcoin can still retrace more, and we'll explore some of the bullish and bearish arguments for it here in a moment. But as far as altcoins go, there are worse times to be in them, considering the fact that they have lost such steam from a price dominance perspective compared to Bitcoin. And we can look at the MVRV to really reflect that as well. Look at all these semi on the midterm. This is a midterm time frame, so we're looking specifically at the 30-day, 90-day, and 180-day MVRV combined. And it's showing that there's just undervaluation across the board. Loom, of course, being the exception. You can see how much the price surge has made its average trading returns not so appetizing right now, because so many traders have enjoyed big profits, making it harder to justify that we're going to see future profits from here. So yeah, with the exceptions of Loom, Litecoin a little bit, Maker a little bit, Merit a lot bit, and STPT a little bit, everything else here is looking either neutral to quite undervalued based on trader returns. Serum is the one that stands out the most. It's really gotten hammered over the past year in particular compared to other altcoins and is having a big underbought signal. So if you trust MVRV and want to use that kind of strategy, that's an asset that's popping out as a less risky option. Quick swap as well, Gala, Barnbridge, and ApeCoin being others that are really standing out. So yeah, altcoins have some argument to make a bit of a run if Bitcoin can stay stable, of course, or if Bitcoin starts to climb toward 30K, that would be a good argument for it. Moving back to the screener for a few more things. On the social volume end, Bitcoin's being talked about at just about the same frequency. Ethereum, don't be deceived, even though it has less social volume compared to the week before, it is still very much a hot topic right now, getting increased social volume as we just showed. Other ones that are standing out, Lido staked Ethereum getting a big boost. Raptron has doubled in social volume compared to the week before. And not much else. I can actually pull up, if we just put an asterisk here on the search bar in our social trends, this is the overall discussion rate over the last 3 months. And you can see it kind of peaked here just about 9 days ago. This was one of the largest social volume spikes outside of this one in late August. And it's just slightly declining right now. So nothing too scary. I mean, it's still, crypto markets are seeing a little more discussion now compared to what it was in the midsummer months here in late July, early August. But for now, it's kind of in a neutral area. You can see it by platform as well, where Telegram has cooled down just slightly. Reddit's pretty flat. Twitter has kind of dropped down over the past month. It was getting a lot more discussion in late August to mid-September. And 4chan's kind of dropped down a little bit as well. And then speaking of some other social trends to keep an eye on, as mentioned, Friday the 13th is hitting the 1 and 3 spots. The word big time, I saw this right before the call and I wanted to see what the AI summary was, which you can see for any of these hot topics, which I think is awesome. It says the word big time is trending because it's being used to describe significant gains or successes in the crypto or finance areas. It's being used to express excitement, enthusiasm over investments or achievements in these fields. So I think it's just a new positive keyword to express success in some respect. So nothing really too news related there, just kind of a meme trend word. CPI is very much a real news word though, with the CPI report coming out a couple days ago, as I mentioned, reflecting that inflation was a bit higher than anticipated. This was probably the biggest driver of the markets over at least the past couple days since the news broke. So I would continue to keep an eye on anything in the news related to the US's, job state, inflation. Of course, interest rates are still going to be a hot topic between now and the end of the year. The Fed opted to not raise interest rates in their last meeting about 3-ish weeks ago. But there is still one more FOMC meeting to go before we hit 2024. And that can have dramatic effects. Voyager is trending also. CFTC filed a lawsuit against their co-founder. That could be an interesting story. This is interesting. The inflation AI summary says the war on inflation is over. We won at very little cost, excluding food, energy, shelter, and used cars. This must be pulled straight from some post that's getting a ton of headlines right now. MasterCard also is worth watching. It announced the successful results of its wrapped CBDC trial in partnership with the Reserve Bank of Australia. And this has some overlap with crypto for sure. So we might have more developments on this story. And we may post about it later today or over the weekend, so keep an eye on that. Genesis also, by the way, it halted withdrawals, and that is a pretty developing story right now. So a few topics to watch on the trending token side. We just posted about it about 8-ish hours ago, but Loom is dominant as expected with its 6x plus that's been going on with its price over the past month. KAS due to a trading competition. Dogecoin, this is always a bit of a concern when you see a meme coin in the top 3 on our trending tokens. It usually is a sign of a bit of greed. This is a bit of an exception though. This is related to the co-founder named Billy Marcus calling out the Dogecoin community for not being productive, mentioned the difficulties in developing Dogecoin due to lack of funding and support, which I personally find a bit interesting because its market cap is, I think it in the top 10 to top 12 in the world right now. Let me verify where it is. 1, 2, 3, 4. Yeah, it's number 10 in market cap. So it's hard to have much sympathy for a meme coin being the 10th largest market cap in the world and the founder saying it doesn't have enough funding. Regardless, it is very much in the news and being talked about at an increased rate. So we may see some volatility and some unexpected price outcomes with the kind of the OG meme coin out there right now. Uniswap launched a beta version of its mobile crypto wallet. Strax, aka Stratus, listed on XT Exchange. And Bitcoin here. This was trending at number 2 about 12 hours ago. So it's starting to drop off a little, but it's still very much a rising token, which is saying something because it's always going to be the asset that's talked about the most. But it was being talked about for several reasons. It's still being discussed a lot related to the ETFs and several people speculating whether it's still a good investment to buy during the bear market as well. And it was also being discussed alongside the announcement that from the CPI report that inflation was a bit higher than expected. I wanted to look at Tether as well before we move on. Tether appointed Paolo Ardoino. I probably am butchering that pronunciation, apologies, but he's their new CEO, and that's a big deal for the top stablecoin in the world. It's a strategic decision by Tether to revolutionize finance under his leadership. So yeah, when a top 5 asset, which Tether is, gets a new CEO, that's certainly something that could potentially move markets. I'm actually surprised it's not higher up than number 10 right now, because that could actually be the biggest story happening out of all of these assets. But Tether is, of course, designed to keep coins stable, and perhaps this news could very slightly improve some of the trust that it has from the many traders and investors out in the crypto world. All right, so looking at some on-chain and social metrics now for Bitcoin, and we'll move on to some other assets momentarily. Transaction volume and trading volume for Bitcoin isn't looking too bad. Volume is about in line with what we've seen throughout the summer. On-chain transaction volume about the same. Maybe even a slight improvement here in terms of transaction volume, specifically in dollar. So everything is pretty normal there. And then when we get to daily active addresses, this is where it starts to look a little more concerning. You know, we did see this big rise here in mid-September in the amount of unique addresses interacting on the BTC network has kind of rapidly declined over the past 4 weeks. We're not in this, seriously concerning zone or anything, but we're pretty much back at our lowest point since, 3 months ago. If we zoom out here to the last year to get a little more context, you can see just how big this drop really is. It's pretty similar to what we saw from mid-April to mid-May, and of course prices did go down during that time. So we're hoping that that trend does not repeat here, but you do have to be a little cautious when you see that the utility for the number one asset in crypto is starting to dry up a bit. On the circulation end, you know, this actually isn't too bad. I mean, on the 1 month scale, a little bit of a rise going on, and that reflects in the NVT model that we have, where we can see that here in October, it's actually showing a little better of a sign. It's still semi-bearish, but we can see for most of the months here since August 2022, a big bearish signal is showing. And if we start to get toward neutral or semi-bullish here, like we saw back in late 2021, that could be a good sign that prices may start to turn around. This is, of course, a model that reflects the amount of unique tokens moving on the network on a monthly basis compared to its market cap on a monthly basis. And when unique tokens are proportionally moving up compared to the market cap, that can have a nice outcome in market caps being able to grow. So definitely keep that in mind. Circulation looks at least a little more optimistic compared to what we've seen for almost the past 2 years or so. Average trading returns, we already kind of touched on this with our MVRV model, but the 365-day MVRV is still just slightly overinflated, while the 30-day is down to about -1%. So short term, there's an argument that we have just slightly less risk than average. Long term, there's still a little bit of profit that might need to be cut off before it looks like a really juicy time to add on to your BTC investment, assuming you have one. Funding rates, pretty neutral, really not much to I won't waste much time here, but we do see that open interest has picked up, but the proportion between longs versus shorts has not really made any waves in either direction. Whale transactions, yeah, kind of similar to what we're seeing with daily active addresses. It's just gradually kind of dropped off, particularly the $1 million or more transactions. This is pretty much the lowest level we've seen all year, not since late December, early January, if we've seen an average of, I don't know, maybe 700 to 1,300 $1 million or more transactions per day on the BTC network. So a little less involvement from whales than we've seen compared to most of the year. That's not necessarily the worst thing in the world, and we will look at the context of that in just a moment. We'll also look at the ratio of on-chain transaction volume and profit to loss in a moment. Before we do those, the mean dollar invested age for Bitcoin is continuing to climb. Investments on average have been sitting in their same wallets for 638 days now. That is an all-time high. We continue to wait for this curve to start to flatten out or begin to dip. That would be a sign that dormant tokens are finally starting to move and a bull run can commence. So this is a very important long-term indicator, kind of works as a validator, but you can see at most points in history when the mean dollar invested age starts to drop, that's when prices start to rise. You saw it very clearly. This was about 6 months into COVID when this started to happen and prices absolutely erupted to a then all-time high in April, and then the all-time high in October and November of 2021. Then, of course, we saw dormant coins stop moving and things dried up pretty quickly. Moving back to just the last 3 months here, not much on the network realized profit loss other than a few blips. It's been fairly neutral. We look for realized losses as a good sign that prices can heat up, sort of like the MVRV metric. It works inversely to what the metric shows. So we want negative spikes, not positive spikes if you're a bull. Supply and exchanges, It's actually moved up over the past week, not significantly, but you can see that, the constant downtrend over the past 3 months has kind of come to a halt here in the last 5 days, going from 5.68% back up to 5.75% on exchanges. So not really severe, but worth watching. We want to continue to kind of see supply and exchanges drop, as this is a signal that there could be less of a sell-off, or less probability of a major sell-off in the near future. Still very low though overall. Social volume and dominance pretty neutral. Maybe a little bit of a spike here on the 7th and the 11th, but Bitcoin overall is being talked about a little over 20% of the time, which is a pretty healthy range. All right, let's look at the ratio of transactions in profit to loss, and then we will move on to what the whale tiers are doing for Bitcoin. Top cap. Yeah. All right, so this is one of my favorite metrics. It looks at the ratio of transactions that are happening at a higher price than the average address received it, or a lower price than the average address received it. And generally, when there are a lot of high spikes like this, prices move down shortly after. And when there's a lot of negative spikes, that's where some bounces can occur. And we saw mostly negative spikes here with the exception of Bitcoin last week. And if Bitcoin was seeing below zero, that would have been a better sign. But because Bitcoin was actually still seeing more profits than losses, that was a slightly bearish signal that led to prices moving down. Now this week, it's still slightly above zero. And we ideally would like to see this blue line under zero, indicating that a lot of traders are capitulating. They're getting out of BTC. They're getting spooked by prices dropping. And that's usually a good signal that we're about to see a bounce. But for now, just a slight downtick compared to last week. It's almost barely moved. But we don't love to see that Bitcoin is still having a high profit to loss ratio. Ideally, something like this between mid-August and mid-September, that's the good bottom signal that we're looking for to show that prices are going to inevitably rebound soon. Looking at the Ethereum, it's looking a little better here. This lends to the argument that a bit of an altcoin rally could happen over the next week or two. It's for a second consecutive week showing more losses than profits, and that's kind of been the case since early August, really. And other altcoins are in the same boat. You can see last week, Cardano, XRP, Litecoin, they were all seeing way more losses than profits. So there are some good capitulation signs that would signal that we could have some rallies among some of the other top caps not named Bitcoin here. All right, let's move on to the whale tiers as promised. I've got a template preloaded here. So it's been mostly good news for Bitcoin Shark and whale holders. They are increasing their supply a bit since mid-August. Looking at the past 2 months or so, if we isolate that bright green line, we see that they have added about 0.15% of the supply. That is a lot of money. They're nearly back to 67% of Bitcoin's supply held, which is a good sign of confidence. This line for Bitcoin and this line for Tether, these are probably the two most important. We're also a week behind. So if I refresh that, there we go. So yeah, over the past week, it has declined a little bit on the Bitcoin side, but not significantly. Tether has also declined. So both of those together would indicate that there's a little less confidence than there was 1 week ago. Could be due to some of the real world events going on. Hard to really say, but the Tether supply and Bitcoin supply are being held slightly less by the sharks and whales compared to a week ago. No major drops though by any means. I would say though that is a bit of a concern. We would always like to see these lines moving up. We can see the long-term trend, right? Tether is still up compared to mid-August, and Bitcoin is still barely up compared to mid-August as well. But at least they are still looking okay on the midterm trend. You can see though on the long-term trend though, Bitcoin was at 67.03% back in mid-July compared to 66.81% held now. So a few different ways of looking at it. I still think we're looking pretty decent for the whales and sharks for Bitcoin and Tether. In better news though, look at Binance USD, the native stablecoin for Binance. It's sitting at about 8 well, it was actually 8.7% when we zoomed in, but you can see the orange line in particular, Binance USD, it's way above its year high now. So lots of accumulation happening from the sharks and whales there. Good sign if you believe in Binance overall, but more importantly, this is still a top 3 stablecoin, and more accumulation from this asset is always good. USD coin is also sitting around even. It hasn't really moved much over the past month. And of lesser importance is True USD and USDP. And DAI is actually moving up a lot. So DAI and BUSD in particular, they're often associated with altcoin rallies. I like the fact that both of them are seeing continued accumulation. That adds to the argument that altcoins could be a good bet over the next month or so. Yeah, I mentioned social dominance looking pretty normal for Bitcoin. Average funding rate looking normal. Let's look at the asset activity matrix here, which we've talked about on a few of the previous calls. If you don't have access to this, remember that you can simply plug in, make a copy of the main one. Maybe Gary or someone can drop a link, or just let us know you need it on Discord, and we'd be happy to send a link to it over to you, and then you can just make a copy, log in with your own email address that's associated with Santiment. If you have Sandbase Pro, you can then plug in your Sandsheets extension, put in your API key, and you'll see the data start to auto load. If you do not have like a paid version of Google Sheets, you might notice that the model will time out after about 6 minutes of loading data. Many of you do have paid versions, which will let it load for a good half hour, which is enough for all of these dots to load, no problem. But you can also use the mini version, where you can just get 20 assets here and see what the anomalies are for some of the biggest assets in crypto: Bitcoin, Ethereum, Cardano, Chainlink, Litecoin, etc. But we've got the big one here, and we always like to show it on these streams to see which assets are kind of getting the most network activity at any given time. Right off the bat, I see a lot of anomalies happening for Unilend. So if I open up Unilend, usually the case is there's a bit of a price surge. It's actually better if we don't see a price surge and there's a bunch of anomalies happening on the network, because that means there could be something brewing that would lead to a big price surge coming up. So if we look at Unilend, UFT, which is the 849th market cap rank asset, yeah, so it saw a big surge in price, but that was a while ago. That was back from the 8th to the 10th. It's been 3 days, and we're still seeing all these big anomalies now. So yeah, it saw this big 42% rise in those 2 days. But daily active addresses in circulation are still quite high. This could be worth checking out. Yeah, mostly the daily active addresses. It got a big social volume and dominance spike. Let's see what else is out there. we're looking at the most recent full day, which is October 12th, which the model automatically compiles. I see REQ, request, also had a big anomaly. So if we go to that asset, this was very similar, a big spike happening a couple days ago, and it's kind of cooled down ever since. But look at this, the circulation just in the most recent day surpassed what we saw during that big spike back on the 10th. That could indicate that there's a second run coming up. So you could look into request, do your own research on that, check out the metrics and see if it's something you would be comfortable trading. DYDX, a bit of a spike. You can see Ethereum has had a bit of an uptick in whales/sharks holding between $100,000 to $1 million in Ethereum. Bitcoin, this box is indicative of a bit of a exchange inflow spike. That's why we saw that upswing in its supply on exchanges. Bancor is still coming off that huge week last week, so you see a lot of these big anomalies from the beginning of the week. Dogecoin, yeah, we only really have a few metrics for Doge. I might even take that completely off the model. Shiba Inu is particularly cold. You can see all these blue boxes. That network has, at least for the time being, looked relatively abandoned compared to some of the big spikes and huge on-chain increases going on back in 2021 and early 2022. DAI is seeing an interesting spike here in whale transactions. Let's look at that for a moment. We saw already that the sharks and whales are accumulating DAI pretty rapidly. So seeing that it's getting increased whale movement is also a good sign. So yeah, look at this red spike here. Just as the model pointed out, it's getting the most amount of $100,000 plus transactions in about 2 months now. And that's a good sign. It does indicate that whales are starting to get more and more of the, I think it's the 5th largest stablecoin in the world by market cap. So more accumulation and more activity by whales would certainly indicate good signs that there's some loading up and increased buying power going on. So look at this, by the way, from a hot and cold perspective. And you can see kind of just eyeball which ones are getting extra hot and extra cold. DYDX there, again, you see a lot of red boxes indicating the network has been more active than usual. Bancor is still more active than usual. XRP getting a lot of cold boxes, so it's really starting to drop off in activity on the network. USD coin was very cold, but it's starting to normalize now. Ethereum a little cold as of late. Cardano pretty cold. This has been one of the colder assets throughout the year, actually. Trying to find a few more hot examples in case you guys are trying to identify those. DEX, very hot at the moment. Storage, this is one of the consistently top developing assets, even though it's not in the top 100. I like to see that it's getting a lot of hot activity at the moment. Threshold as well, another one. Terra Virtua Collect is seeing some extra hot activity at the moment. So yeah, that's just a few examples. Of course, Loom over here hiding on the very far right. Not surprising at all to see a ton of orange and red boxes showing that it's transaction volume, active addresses, network growth, etc. are all getting tons of increases right now. Also, I mentioned Unilend. Look at how hot these first 5 columns are, those being transaction volume, active addresses, network growth. whale transactions and accumulation from the sharks holding between $100,000 to $1 million in Unilend. So that's just a recap of some of the other projects you may want to keep an eye on for whatever kind of trading you want to do with them. For the last 10 minutes or so, Gary, do you see any requests or just general questions about the markets, what's going on in the world? Happy to discuss anything and everything you guys have in mind. Sure. Yeah, it's been a few months now. I think, what, 3 months ago, July, is when that halving occurred. Let's take a look at how the Lightning Network is looking right now. Choppy mouse. All right, so Litecoin, it looks like it isn't moving in the right direction in terms of transaction volume. It's kind of continuing to tick down a little bit. Trading volume has been pretty dormant, and transaction volume is moving downward. Same with daily active addresses in circulation. It's kind of moving down at the moment. Circulation has at least kind of stabilized. It's not decreasing the way the other utility metrics are. But overall, I see mostly less usage on Litecoin as the months since the halving have moved on. On the MVRV side, some positive signs. The 30-day traders are down about 4.2% on average, and 365-day traders are down a whopping negative 23.4%. That definitely indicates that there's some meat on the bone and less risk than usual if you'd like to add on to your LTC holdings due to some pretty major losses that have started to accumulate for the average trader on the LTC network. Funding rates, yeah, there's actually been some pretty sizable longs going on lately. People trying to ride the wave up. We'd like to wait to see these neutralize and potentially even look like this, like we saw in mid-August, indicating a ton of shorts and people betting against the price. That would increase the probability of a rise should that occur. Whale transactions look pretty stable, maybe a slight decline over the past month. Overall Litecoin addresses, let's see, the price is sitting at a little over $61. So if we look at addresses starting about here, 10K to 100K and 100K to a million. Yeah, it looks like less 10K to 100K and a few more 100K to 1 million. That doesn't really tell us much. But the overall percentage held, it looks like, so if we merge these together, they've moved down a bit just in the past couple days. Let's add on price here to see how much correlation there is with these two tiers. There we go. Turn those into bars. Yeah, so big accumulation happened here just on September 12th alone. That did lead to a bit of a price swing, but it's kind of flattened out and dropped back down ever since. Let me add price BTC, which might give us better correlation, because obviously any Litecoin is going to ebb and flow a lot based on what Bitcoin is doing. And this gives a better indication of how prices move relative to Bitcoin when its sharks and whales are accumulating and dumping at any given time. So let's add the price bars back on here. Let's go to the last year, get a bit more of a sample size. All right, so yeah, we definitely see some correlation, especially here in mid-December when they started to rise. We saw a big accumulation after the price dump, and then that led to Litecoin seeing kind of its biggest price versus Bitcoin it has in the past year. And then they quickly dumped big time before accumulating rapidly I mean, these sudden huge spikes tell me that very few addresses are able to hoard a lot of Bitcoin, or I'm sorry, a lot of Litecoin all at once and make a major difference, which is surprising considering it's a top 15 market cap asset. But yeah, overall, there has been an overall push to accumulate from these sharks and whales ever since late May. And since this time, the Litecoin sharks and whales have accumulated about 1.3% more of the overall supply, even though prices have gone down relative to Bitcoin. Now, this is pretty normal. Most altcoins look like this, with its price moving down relative to BTC, with Bitcoin having such a big role of price dominance for a lot of 2023 so far. But I like the sign of sharks and whales accumulating more and more over time, and they aren't even sudden huge spikes like this. This is a very gradual, healthy accumulation cycle that we've seen over the past 5 months or so. So that's a good takeaway for Litecoin. Just checking to see if there's anything else standing out. Yeah, not a lot of dormant movement, unfortunately. You saw all the dormant movement in the weeks leading up to the halving here, and that did lead to this one big spike here in early July, which was a few weeks before the halving, and then the actual halving itself has been kind of a disappointment in price so far. So this was kind of a buy the rumor, sell the news sort of situation. I know Ethereum and its merge had a similar impact last year when there was a bit of a price upswing in the weeks leading up to the merge, and then when the merge actually happened, of course, you saw the prices drop pretty rapidly. So, you know, the fact of the matter is the mining difficulty for Litecoin is twice as difficult now, and theoretically, that does have a long-term positive impact on prices based on the history of other halvings that have happened. So it's all about patience with Litecoin, really, and I think that there are some positive takeaways, especially the fact that sharks and whales aren't being deterred from the fact that prices have dropped relative to Bitcoin. All right, do we have one more asset request, Gary? That's all right. Yeah, I mean, I think we covered a ton here. I can tell my voice is getting raspy, so we're definitely covering plenty of different topics. But yeah, overall, I mean, the takeaway, guys, is continued ranging. I mean, Bitcoin has been in this 26K to 28K cycle for quite some time now, and I anticipate that we'll probably see a breakthrough when the BTC and USDT sharks and whales finally show, a significant, congruent attempt to accumulate. The last time we really saw both moving up at once was right at the beginning of the year. And the overall sentiment was extremely bearish at that time. But you can see this sudden upswing in Tether purchasing and Bitcoin purchasing and how that impacted prices immediately. Even when Bitcoin's sharks and whales were kind of dumping a little bit, look at how USDT was being accumulated very aggressively all the way up until June, right? And then June, there was this minor drop off, but they're still holding way more, 37.3% of the supply, compared to what they were back here a year ago, which was 29% of the supply. So I really more and more have believed in the Tether shark and whale holdings between $100,000 to $10 million. That's the juicy key stakeholders that really are, adding to buying power or removing buying power from exchanges at any given time. I'd also like to mention that stablecoins on exchanges in specific are important to watch. So if I do really quickly USDT, we'll just load a new chart here really quick, and we'll say supply on exchanges, and we'll also add top supply held by top exchange addresses. So look at this. This is why I am kind of staying pretty optimistic about markets right now. Ever since late June, the supply in exchanges has really increased rapidly, going from a low of 17.8% on exchanges up to 25%. And unlike regular crypto assets, if there's more stable coins on exchanges, that implies more buying power. That means there isn't much reason for stable coins to move to exchanges if it's not for buying crypto, right? So the fact that this has been moving up is a good sign, and especially the top exchange addresses, the top 10 largest Tether addresses, they're now holding the most they have since December. So the highest amount this year in top exchange addresses in terms of their holdings. So I like the look of this, and this is one reason to be optimistic. There are some other concerns. Utility for Bitcoin and some of the other top caps is still struggling a bit, but stick with it. And I think that we might start to see another run toward 30K, assuming metrics like these continue to move in the right direction. So with that said, guys, stay safe. There are tons of scary things happening in the world right now, and you all have your own opinions on them. But regardless, thanks for tuning in and continuing to monitor the crypto markets with us. We'll continue to keep you posted about all of the latest and greatest stories that are happening, and we continue to improve and innovate the many models that we have out there based on your opinions and thoughts on what would make great metrics in the crypto world. So thank you all. Stay safe, and we'll talk to you next week. Thanks as always, Gary, for running the stream, and talk to you all soon.